All right, what's up, everybody? It is Wednesday, June 9th. I just uploaded my new podcast, so go check it out. The link is right here in the description below. So, got a lot of things to talk about. First of all, by the way, in that podcast, I go in a little bit deeper with the Basel III and the gold situation. And I try to unravel that. It's a fairly kind of cloudy situation, I would say, in terms of what the impact on gold is going to be, I think anyway. But you got a lot of, wildly bullish people out there. They're mostly these just super intense gold bugs. People always touting gold, the same people. I mean, what I call the rational people, the thoughtful people that I have been able to, read their comments, I think more or less it would fall in the lines of neutral on gold in terms of Basel. And it could be negative. I go into that in the podcast. And guess who's really bullish on gold? Jeffrey Gundlach. Everybody, yeah. He's bullish on gold, which is another thing that makes me kind of skeptical because that guy is an excellent contrary indicator. And he's bearish on the dollar, which, that's been my view now for a long time. But I have to say that if we see a slowdown in the fiscal flows, all right, which is something I've been talking about, the dollar could catch a bid here. Also saw a little bit of an improvement in that last trade figure. So, dollar could catch a bid. And the fact that guys like Drunken Miller and Gundlach, they're bearish on the dollar down here, I wouldn't be surprised to see the dollar catch a bid, but I think its larger macro outlook is still negative. All right, today, 10-year bond yields broke down below 150. All right, I think that was the lowest level in 3 or 4 months. I've been telling you that. A lot of people out there a month ago, a few weeks ago, they're saying, yields are going to shoot up because of inflation, hyperinflation. Bond yields broke down below 150. Lumber was at a new 3-month low. Now, tomorrow we get the CPI for May. All right, and that could be another big number. So, but let me just say that these numbers that the government puts out, those are rearward looking numbers. I mean, that's what happened a month ago. I keep telling you guys, you got to focus on ahead. What is going to happen? What are the drivers of basic conditions looking forward? What will be the drivers of basic conditions looking forward? And you know that it's the fiscal flows. And we are coming into a period now, starting this weekend, where those benefits cuts are going to start to happen. Now, the irony of the situation is that if you look at the fiscal flows right now, even when you adjust for comparisons to this time last year when we had the big stimulus, the first big stimulus for the COVID, fiscal flows now are starting to accelerate again, even when you adjust for that year over year, comparison. So if we were not heading into these benefit cuts, I would be saying, hey, look, the pullback in the market, and by the way, I've been negative on the market. I've been cautious. I've been telling you guys I'm worried about these cuts. I would be saying normally, if we weren't heading into these cuts, I would be saying that the pullback in the market, that is a good, healthy thing to flush out some of the bullish sentiment. And also, you got to lift up the bearish sentiment. Remember, I told you that bearish sentiment is at a 41-month low. A 41-month low. So you got to get that up. That's got to come up if you're going to see the market. And I would just, if we weren't heading into these cuts, these benefit cuts, I would say like this is a great opportunity. We get a pullback. You accumulate some more stock. The market's going higher. But again, I'm worried about these cuts. You know, this is, I don't know, the 17th time I've been saying this, but, you know, all these states thinking that the cuts are just going to send people back to work and everything's going to be great. I don't know if it's going to be that great. And I don't know if it's going to be that great for the national economy. I really don't. I mean, you really don't want to cut back on these flows right now. And there's nothing going on in terms of new bills or new fiscal policy. Well, there was something yesterday. I think the Senate passed a bill, bipartisan, of course, because it was kind of geared towards military, but it was a bill to increase investment in basic science and research, also investment into chip production, that sort of thing. But it has to be passed by the House, but it probably will be. I think it was like a $250 billion bill. So that's something. But nothing on infrastructure. The thing is, you know, it's at a standstill. I think, like I said yesterday, you know, we may have to wait until the new fiscal year, October 1st. And we still have the debt ceiling out there at the end of July. So, again, a lot of you ask me, well, Mike, what's the thing that would make you worried? Exactly the kinds of things that are coming up right now. A slowdown in the fiscal flows, a contraction in the fiscal flows. I mean, you just that's not a bullish environment. But we'll see how it looks. I mean, maybe it's not going to be as bad as I think right now. You know, if these cuts were not happening, looking at the flows right now, there's nothing wrong. There's nothing bearish. I mean, you're just going to get a pullback and then the market's going to go higher. But again, we got to be concerned with these flows. So tomorrow you might get a big number in that CPI, but that's a number you got to fade that number. I mean, if that number comes in big and they start selling off bonds, I mean, that's a great opportunity. You know, there are things to do. I mean, it's not like, you got to go run and hide somewhere. You can still make money in this market. There's always opportunities. You just have to know what the landscape looks like. You got to know how it's going to play out. But tomorrow, if you get a big number and they start selling treasuries, that's an opportunity to get in there and buy. All right? If they, if that's a big number and this whole inflation mania gets triggered off again for the day or for an hour after that number, you go against that. You go against that. Oil, I've been talking about this. All right? We had numbers today in that EIA report, and they didn't look so hot. I mean, you had big increases in gasoline and distillate inventory. Big increases. And that happened even with a very large increase in refined product exports. So exports went up of refined product, but even at the same time while that happened, inventories went up. All right? I think gasoline inventories now are like at the highest, I don't remember, highest level in, could be 4 months or something like that. I have to go back and check. Crude inventories were down. All right? And that, I guess, you can look at that as bullish. However, what's happening is that refiners are they're buying up a lot of crude to pump through their refineries. If you look at refiner inputs, that was up again. I think that was like the 4th week up. So refiners are taking all this crude to pump into their refineries, but at the same time, product is building. Supply is building. That's not good. That is not good. Crude exports are soft. I mean, they're not really, they're still below 3 million barrels a day. So, and don't forget, next month, OPEC's going to raise output. All right, U.S. production increased by 200,000 barrels to 11 million barrels a day. So that bounced back a little bit. And we saw a sell-off in oil. I think the futures price in oil, WTI recently got over $70 a barrel. I think that's pushing it a little bit. I really do. I mean, at the very least, I think you'd see oil pull back maybe into, I don't know, the low 60s, maybe even the high 50s before we even get to July, when you're going to get an OPEC production increase, an output increase. And if these benefit cuts, remember the benefits, I mean, they go into people's pockets. Part of it goes to pay gasoline. People are going to have less money to spend. If these benefit cuts result in a slowdown in the economy, then watch out for oil, because it's going to be hitting at exactly the moment when the economy is going to be slowing down. I mean, the OPEC production increase is going to be hitting exactly at the time when the economy is going to be slowing down. That's bad timing. There's money to be made here, folks. You got to know what to do. I would say what's unusual about this is that it's really like the first time for me personally that I've turned cautious on the whole outlook. And again, that might be premature. I might be reading too much or thinking too negatively about these benefit cuts. Even with the cuts, maybe, job growth is going to zoom up higher. Maybe bank credit, bank loans will start to zoom up higher as people work. I don't know. Like, I got to see the numbers. That's what I do. But right now, I'm saying that the prospect of cuts and a slowdown in the fiscal flows, I don't see how that's a good thing. I don't see how that's a good thing. At this late stage in the game, when you have the stock market at high levels, just near an all-time high, I don't know. You don't want to see that happen. But that's what's happening. So anyway, check out my podcast. Go to the link. And of course, don't forget to like and subscribe. All right, everybody. See you tomorrow. Bye.